You mentioned that you believe we're already in a recession. We obviously saw GDP contract in Q1. We have the White House press secretary saying that there is no recession imminent. They don't see any signs of recession. You see Janet Yellen also saying that she doesn't believe a recession is imminent and no one needs to worry at the moment. What is the difference between your view of the world and their view of the world? Why do you think we're already in a recession?
I think the difference is I'm being honest, right? I'm being intellectually honest. I'm not managing the expectations of the country like those guys are. I think that's the primary job of the Federal Reserve, by the way, is to manage expectations of the markets. And because expectations are everything. And if you lose your perspective on something and if you go crazy, then that's when things plummet and get out of control. So I think they want to sort of maintain the concept that they actually do exert significant control over the markets. And in a way they do, but in a more powerful way, they don't. The markets themselves are so much more powerful and so much larger than the Fed itself. But so what are they doing? I think they're being not totally honest. They're twisting the truth. They're focusing on things like, well, unemployment is still very low. That's true, but that's going to change probably pretty rapidly. Everything else you look at, whether it's consumer sentiment, whether it's housing rolling over, whether it's the stock market crashing, you can go on thing after thing. Manufacturing is way down. I mean, we're talking not just recessionary levels. Some things are at all-time historic lows right now. That is not good. The CEOs that were interviewed, this just study came out. I'm sure you talked about this too. 75% of CEOs think that we're either in a recession or we're going to be in a recession within the next 12 months. That's for real. That's no joke, right? And as Stan Druckenmiller has pointed out in the past, when you have a high dollar valuation, high oil prices, and high interest rates, that always leads to an earning recession for companies. This stuff is still coming. We haven't even hit this part yet. So we haven't hit the ugliest part of everything right now. The one thing that I'm watching, by the way, really closely is the price of oil. Oil has been kind of on a downtrend recently, and I think that it probably has peaked and it's rolling over. Similar to 2008, the stock market had started to decline, but the price of oil had continued to ramp up higher. Once you see that price of oil peak and then descend, it can descend extremely quickly. And what that does is the floor drops out of risk on assets. Stocks, I think, risk on assets in general are going to crash and probably crash hard and further than they have already. And then at that point, that's when we'll get the disinflation, right? The disinflation that Powell wants. He's gunning for demand destruction. He's succeeding. He's destroying demand. He's bringing down the wealth effect. He's making people poor. He's shutting down businesses. He's getting what he wants. And I think we should be careful careful about what we're wishing for, because we're going to get it, and it's going to be ugly in the short term.
Obviously, he has doubled and tripled down on his promise to increase interest rates. We saw a 75 basis point hike with the last hike. And it feels like many people in the market are like, hey, man, no mas. Like, we've already seen demand destruction. We've already seen the economic contraction. But they remain committed to raising interest rates even further. They're going to continue with the quantitative tightening. What is your read on their ability to actually follow through with what they're saying, given the contracting economy, given asset prices down already so much? Is this just inevitable that they will push us into a full-on recession and people should brace for that? Or will we see the Federal Reserve wave the white flag, give up, and kind of reverse course out of necessity because their demand destruction is almost too good and people start getting really, really hurt by it?
I think kind of all of the above. I think that they will wave the white flag at some point and they will pivot and go dovish again. And that's definitely coming. But first, we need lots of pain. And I think they're going to succeed. I believe Powell when he says that they are not going to stop their tightening, their hawkish stance, until they see significant sustained disinflation. I think he's going to get what he asks for, and it's going to be really ugly. And again, I think that the markets have a lot further to fall. They started at extremely high, historically high valuations from a price to sales, price to earning perspective. Basically, any metric you use was kind of similar to 1929, the dot-com bubble, 2008, those kind of levels. That's where we were, and we've come down a lot from there. But there still is much further to fall. I would not be surprised to see the Nasdaq fall another 30, 40% from here, maybe even 50% from here. That would be not surprising. And I think that's the point where the Fed would pivot. They would find, and we would definitely be seeing disinflation, and if not outright, just deflation at that point. That's going to be ugly. I don't wish that on anybody. I really recommend that people consider hedging or at least holding larger cash positions at this point, because I still think there's more ugliness to work through before the Fed pivots back to dovish again. Real quick, if I can put on my conspiracy theory hat, one thing that I think the Fed is trying to do is move as fast as possible. That's why they're raising rates at kind of an unprecedented rate. And I think they're very vocal about what they're doing, about wanting to destroy demand, about realizing that it's going to be sacrificing the stock market as well as the housing market, things like that. I think they want all of this to happen so that we can bottom and then they can pivot and turn back on to QE, or at least to pause before the midterm elections. I think they can't go into midterm elections with inflation still high and with stocks still falling. They need to try to have this happen very quickly, probably this summer, crash and burn, so that then they can bottom and then turn everything back on again and get assets kind of going back up again before the midterm elections. That's my conspiracy theory. I'm not political at all. I don't care at all. But as it stands right now, the Democrats are toast, right? Because if you go into a midterm election with the economy down and inflation high, it's just going to be an absolute landslide for the Republicans, as far as I view.